Try this today. We are going to introduce one simple technique that will change the way you analyze stocks. Remember to stay right till the end to see a real-life example where its stock price has risen 68%. Alright, we know that there are 10,000 stocks in the world for you as an investor to look at. But how do you quickly develop feelings for a particular stock? How can you quickly know that this stock stands out among the rest and can potentially give you good returns on your investment? We would like to introduce you to this technique we call the net cash technique. As we know, the balance sheet of a company is an important component to look at for investing. For this strategy, we want you to go straight into looking at the asset component of the balance sheet and look for the company's cash position. Next, go to the liability component of the balance sheet and look for long-term debts. After this, subtract cash with long-term debts and we will arrive at our net cash value. For this case, 100,000 subtract 200,000 will give you negative 100,000. Please keep in mind of this formula. The reason we don't include short-term debt in our analysis is because such debts are typically account payables, which should be well covered by other short-term assets like account receivable and inventories. With this net cash value, you can simply compare it against the market capitalization of the company in question. For the benefits of viewers who are not familiar with market capitalization of company, it is simply the market value of the company, and it is derived by multiplying price of stock and its number of shares outstanding. In general, the higher the proportion of net cash value against its market cap, the healthier the company's balance sheet. Now, I want you to use the net cash value we calculated and divide it by the number of shares outstanding. This figure we derive gives us an important perspective as this value represents the amount of discount you get on a stock price. You can also view this as a cash rebate for buying the company's business. In essence, price per share minus net cash per share gives you price after discount per share. As all companies are holding on to different balance sheets containing different values of cash and long-term debts, you can use this simple strategy to quickly find stocks that are offering good discount. Take Microsoft stock as an example. Its cash and short-term liquid investment stands at 134,000. Its long-term debt stands at 71,000. Therefore, by subtracting 134,000 by 71,600, we derive a net cash value of 62,000. But do note that for a large company like Microsoft, these numbers are of course in millions, and this gives us a net cash value of 62 billion. Now, we can see that Microsoft is now trading at $169.81. If we multiply it by the number of shares outstanding, we will derive a market cap of $1.29 trillion. We will then proceed to divide our net cash value of 62 billion over our market cap of 1.29 trillion and we will derive a 5% discount on Microsoft shares. While it might just be a mere 5% for Microsoft stocks, on some rare occasions, we might see more than 100% discount to a particular stock. This means that the net cash value per share is more than the price per share. What this also means is that you are essentially buying the company for free, and furthermore, you are given cash for buying the company. Don't believe? Let us give you a real-life example as promised at the start of the video. This is Crypto, an advertising platform. Its cash and short-term liquid investment stands at 418 million, and it has negligible long-term debts. With this, we are able to derive a net cash value of 418 million. Now, take a look at its 52-week low price on 23rd March 2020. It stands at $5.94. If we were to multiply this by 62 million shares outstanding, we will get a market cap of 368 million. At this point, its market cap is actually lower than its net cash position of 480 million. This makes the stock essentially free with an excess of $50 million. However, do know that over the course of last few weeks, the stock market price has risen to a market cap of 618 million and that represents a share price increase of 68%. This provides opportunities for so-called arbitrage play and many occasions where astute investors have taken advantage of. If you look deep enough, you might even be fortunate enough to discover good investment opportunities that others might be unaware of. Typically, these opportunities have the following characteristics. The investment should be off the radar, meaning it is not publicized or covered by the media. It should not appear in any of the bank's analyst reports. And when you look at the majority shareholders, typically it should not consist of renowned fund houses or asset managers. This is because if it is such a good opportunity, these astute seasoned investors would have already squeezed it dry. Lastly, the stock is probably not a mega cap stock but something relatively smaller. However, as I always say, there's usually no free lunch in the world. Typically for companies which indeed have net cash position larger than their market capitalization, there's a good chance that their business models might be failing. They might be making losses or are expected to burn through their existing cash position. There is likely little to no confidence that the company can turn around their business, and apart from this, the company might require to spend their remaining cash massively on capital expenditures and turnaround strategies. In general, the outlook is bleak. Despite this, it is not to say that all companies are like this, and as mentioned, there will very well be some companies out there with extremely strong net cash position but got overlooked somehow. We want you to adopt this strategy today and see if you can find any excellent investment opportunities out there, whether or not they come for free or are on very steep discount. However, do take note that this approach is just one way of looking at investments. There are many other considerations before one can say with much confidence that this is the right investment for himself or herself. We hope that you have enjoyed our sharing, and if you have any particular investment strategy or any questions in mind, please comment under the comment section. If you have not checked out our previous video on a simple explanation why oil prices went negative, please click on it now and watch it. If you like our content, please don't forget to like and subscribe to our channel. We really do need subscribers like yourself to keep the channel going. Your support is very important to us and we appreciate it. Thank you.